right, we're live. All right, guys, we're ready to get started here. We're watching the markets, getting ready for the opening bell. Should be here in a couple minutes. Let's get things all set up here. The opening bell is going to ring here in about 4 minutes. How are you guys this morning? Hope everybody's good, ready to trade. We're looking at the four indexes here in the futures market. My name is Lan Turner, and happy to be here. My website is tradementors.com. So this is Trade Mentors. This is my channel, and we're just going to do a little trading today. Glad to have you along. Looking forward to a good day. Hopefully we got a good day. The first thing we want to do when we get ready to trade is look at the calendar. We want to make sure that we know whether there's any government reports coming out, whether there's something out there that we need to be aware of that's going to move the market. Now, this morning at 6:30 a.m., you can see now that's 6:30 my time. That's Mountain time, so you're going to have to do the adjustment on yours. So that's 8:30 Eastern back in New York. So 8:30 in the morning, 6:30 my time. GDP growth rate, quarter over quarter second addition here. So this is it came out, previous was 2 and the actual is 2.1. So GDP ticked up 0.1. So that's good. So that's a little positive news for us this morning at 6:30. Didn't move the market much. I watched it at 6:30. The market's open at 6:30, but that's the futures market. That would be the pre-market session over in the stock market. And we're watching the markets out of Chicago. So out of Chicago, these markets are open running 23 hours a day. And not like the stock market. In the stock market, if you're going to trade the pre-market session, you can only use limit orders. And there's not very much volume, and they only do it for an hour, 2 hours before the market opens. So over here in the futures market, these things are open running 23 hours a day. They only close in the afternoons, actually, for an hour, not in the mornings, not in the nighttime. So these run all night long, and international countries will trade these markets. So that's why you end up with a gap. You look at your stock chart and you're like, what the heck happened? Gapped up. So market's getting a little excited before the opening bell here to 7:28. This is the 7:28. For me at 7:30 will be the opening bell. So there's your first bar coming in. This is the Nasdaq down here in the bottom right corner, which would translate over to the stock market. That'd be the QQQ. So this is the Nasdaq. This is the Dow. To translate that over into the stock market, that'd be DIA. And then up here in the upper left-hand corner, this is the S&P 500. And so in the stock market, that'd translate over to the SPY. And then this is Russell 2000 down in the bottom left corner. It's all of our small caps. And I think I have to think about it, but I think it's TLY or something like that for the symbol over in the stock market. I have to double check that one. Let's see. So coming back to the news, we'll just look at the news real quick here. Anything coming up 6:30, everything's past 8 o'clock. We got pending home sales. Now, it's not red. It's not a huge one, but it could still move the market a little bit depending on the size of it. Previous was 0.03. At 8 o'clock, you'll be wanting to watch that. We'll see if we're still around at 8 o'clock. I'm not sure if we will be or not. It depends. It'll depend on how good of a day we have or how good of a morning we have. So we're going to watch these markets. The first thing we want to do is actually I want to kind of, boy, it's getting ready to take off. Look at the Dow. It's funny. We're going the opposite direction. Now, usually these four markets will trade the same. Okay. They kind of stay incongruent with each other. So when you have the opposite happening, that's not normal. So we got the Dow falling while the Nasdaq and all the other markets, we got the S&P is rising, the Russell's rising, Nasdaq's rising, and the Dow is down. Now, if you remember on Monday, we had the same situation where they wouldn't sync up. They wouldn't all go the same. And the reason it's great to watch all four at once is because usually because they all travel the same, they don't travel perfectly the same, but pretty much the same. One will take off and go, and then the other one will go, or three of them will take off and go. There's the opening bell. We're ringing the bell right now, and these markets are taking off like a shot. Look at the Russell. What happens is you end up with a lagger. one that goes slower than the rest of them. And so the three will take off and then the one will kind of follow slower. And it's not always the same one. So what you can do is you can trade the lagger. You can, because if all three take off and then this one holds back, well, you can be pretty confident that that one's going to go with the rest of them. And so that's the one you trade. You trade the lagger, the one that's a little bit behind all the rest of them. And it's not perfect, doesn't always work the very best, but it's a pretty darn good strategy. And so I like to do that. We'll watch all four of them. So because of the bullish news that we had on the morning session or an hour ago on the GDP growth, that's good news. So we would expect the markets to rise. So look at the Russell. It's spiked. Now this is why we don't jump right in and start trading on the opening bell. And a lot of guys will. And this market could easily be a nice trend higher, and that would be our trigger right there on the opening bell. This is just the average true range is what those are. So oftentimes you'll see that can oftentimes be a good buy signal right there to get in and just ride that thing higher. But the problem with it is sometimes it doesn't. Sometimes it whips all over the place. And so like the Russell, you'd have said, oh, the Russell's great. Let's get in and just ride that thing up. If you'd have done that yesterday, that'd have been great. If you'd done it here on the Nasdaq, taken that crossover of the VWAP and of the average true range, they matched up right there, and that Nasdaq took off and went going to the moon. Great, if you would have caught that and gone with that, that would have been good. Same thing with the S&P. You had that crossover and it started to go, but it had a little whipping in there. If you'd had a stop in there, you'd have got stopped out just to have it take off. This one here didn't whip too much. It didn't go down and break a new low, but those are big bars. I want to show you. You have to be careful because those are big bars. That's $280 for one price bar. Of course, all the way back to where the entry signal was, that's $535. And if your goal is to make $500 a day, you'd be done. So the opening bell, a lot of guys like to trade that. But for me, it gets a little whipside, a little crazy. I like to be a little more careful, a little more cautious. I'm a little bit more conservative trader. I don't want to jump into this fray with all these big boys in there jumping and running around, trying to, take each other's money. So I just wait and watch this one go, and we'll bracket it and kind of look at where the high is, where the low is. And we'll kind of use that as a bracket for the day and look for it to break above or look for it to break below. We are a little bullish on this market because of that tick up on the news. The GDP did have a little, one tiny little point of growth. So that's good. And so that's positive news, and it should drive these markets higher. So look at the Nasdaq. So see if you'd have been in the Nasdaq. Look at that last bar just whipping all over the place. Just have to be really careful on this opening because it goes crazy sometimes. So we're going to come in. I want to make sure that I want to go out and I want to show you. I want to teach you a lesson here. I want to show you something. So I got a little lesson planned, but I wanted to watch this open first before we went out and started looking at other things. First thing I want to do is I want to show you, these are all 1 minute charts. So this is all 1 minute charts up here on the quad. And what I want to do now is I want to go out and I want to look at the daily charts because I want to see whether we really anticipate on a daily basis whether we're in an uptrend or a downtrend, because that's really important for us to look at the overall longer term trends. I'm what I call a down. I trade from the top down, which means I look at the longer term trends to see where we're at to get an overall gauge of where the markets are. I'll come down to the shorter term time frames and then execute on the shorter term time frames. Look at that Nasdaq. Now we're looking at, these are Fibonacci bars, so they look a little different than normal bars. I'm going to turn the Fibonaccis off. Watch this. So the Fibonaccis are now all turned off. So notice the bars are a little bit different. See how big they are? When you use Fibonacci bars kind of fill in the bars a little bit and do an average of the bars. So they're kind of and almost like an indicator in themselves, because you watch the ATR and it's kind of a little free flowing indicator. Well, if you turn the Fibonacci's on, it's almost like taking that average true range and including it in the mathematics that create the bars. And so it almost has a mathematical model to the bars themselves. And I like it. I think it helps me a lot. It kind of helps me know where the areas of support and resistance are mathematically. And when those bars are going, we can use those bars to trail behind. And it's not the actual price of the market. It's kind of the average of the market. And so it ends up being a pretty good tool for us. So I like to look at the Nasdaq, indecisive, down it's going, dropping like a rock. Here comes the S&P following. Now we want to trade the ABC patterns. We want the market to go and have a nice smooth trend. We want a little bit of a pullback, and then we want a continuation of that trend. And that continuation, that what we call the reflection or the next leg up, the AB and then the CD. We want to trade from C to D. That's my favorite trade, and those are the ones I'll try to do here for us today. If we can find any of those, here's a perfect example of that right here, back before the market. So you see right there, the market took off, started to rally. Well, we don't take that first rally. We miss that A to B. Don't take that one usually. And then see the little two bars come back. We get two red bars. Then the first green bar, bam, that's our signal. And we take that next leg up. And then we just trail behind those one bar back, those Fibonacci bars. You can see how they made every single one was higher high or higher lows, and we just trail up until we get stopped out. Or we can put our trailing stop, we can put it on those yellow lights. Now, of course, this is Track and Trade. It's a professional level trading platform. If you don't have it, you need to go get this program so you can actually trade. You don't want to try to trade these markets with a charting program. There's a big difference between a charting program that you might get for free on the internet and maybe a buy or a sell order button that comes along with it, and a trading platform. You want an actual trading platform, whether it's this one or any other one. This is mine, of course. And so I would recommend you go grab this one and come along with me and follow along and do the things I do, and I'll teach you how to use this software because it's all automated. The great thing about a trading platform is that it can do so much for you, whereas just a charting application that just shows you price with a buy sell button, that's not going to be any help to you. It's not going to actually trade for you. And you want to have, if I got a software program that's trading for me and it can execute with absolute precision, and you don't, you got some little, oh, I'm going to hit buy over here, or I'm going to, have to fill out a little order form to buy and sell, you're going to get your ass handed to you because guys like me are going to beat you every time to the punch. So it's fast execution is very important when you're trading like this. If all you're going to do is just going to go buy a stock every 6 months, you don't need a hot, active performing platform like this. I mean, it's nice. I still use the stocks version of Track and Trade, obviously, to do my stock trading. But, these high performance platforms are designed for easy execution, and the software will actually trade for you. So that makes a big difference. Makes it easy. All you have to do is when you make the decision point, you hit one button and it's all done. It does everything for you, trails the stops, puts the limits. You can program it, do whatever you want. So that's important to have. So go run over, get you a copy of Track and Trade. You can get a 2-week trial and then come back here and work along with me. What I want to do is I want to show you one thing I like to do. The Track and Trade has these really cool features over here in the charting tab. This is your control panel on the right hand side. And this is where we control everything in the software. Look at these markets. They're not doing anything. They're just being stupid. Okay, well, at least we got a high and a low. So we got a bracket. We can come in here, and I'm just going to bracket this high and low. So that's the high of the day so far. That's the low of the day so far. So we just bracket that, and as the market plays through those that price level, we'll kind of watch it very closely. I'm going to primarily do that with, well, we want to do it with all the markets because we're going to watch them all. So here's the high for the day. There's kind of an important point. This is 730 was right here. This is the low of the day. We got some areas of support down there that are pretty strong here on the S&P. Let's go look at the Dow. Here's the Dow. Dow's breaking above its channel, or just creating one right now. It looks like right in there. It wants to break out and go higher. And then we've got the Russell that made this crazy move up here, and then another crazy move down here. Now it's kind of just floating in the center. So we'll have to wait and see. I want to see these things kind of start to form some sort of a semblance of a trend, and then we can start to trade them, because we're trend traders. We're momentum traders. We can't trade these little whipsaw sideways things. That doesn't do us any good. That would be a lot of scalping going on in there, and that's really hard to trade, especially in the first thing in the morning where that thing's going crazy all over the place. But I like to be a trend trader. I'm a day trader, not a scalper so much. And we want to catch a little trend and just let that thing ride. And we'll do 2 or 3 of those in a day, and that should be all we have to do. So I like to set a goal of $500, initially, and then if the market looks like it's good, we'll set another $500. But I like to work in steps. And then if I lose some money, my goal is to recover the money first and then go back to trying to make money. So that's how I do it. You'll get a lot of different guys telling you different things. But if I go down, my first goal is to recover. So I recover and then start to trade for profit. If I can get up first, then that's great. I love to, have my very first trade be profitable. That's the best thing, right? But if your very first trade goes negative, then you're not trying to get that $500 with the next trade. You're just trying to get your money back to green. You're just trying to get back the losses. So there's a kind of a strategy in there, risk and money management strategy that I like to run. And that's how we'll cover it. But I want to show you this feature in the software that lets me create these portfolios. So if I come in here to the charting tab, again, this is a control panel over here on the right hand side. The one of the things I really love about track and trade is a lot of programs, if you're going to like change settings or something along the way, they pop boxes up in front of you. Now track and trade does that a little bit once in a while, but for the most part they've eliminated most of those boxes. The order boxes and stuff will sometimes pop up in front, but all the information is over here in the right hand panel. So anything you touch, all the controls are in that right hand panel. They don't pop up in front of the chart, because I hate things popping up in front of the chart. So, Windows does that all the time. That's why they call them Windows. Windows pops up in front of you all the time. It drives me crazy. So having this control panel on the right hand side where everything's controlled over there and not popping up in front of your face all the time, covering up the chart covering up that active chart, it's really a nice feature. So we come over here, and in the charts tab, you can see that I've got this top window. This is to create portfolios. And so you can see all the little portfolios I've got in here. And I can just click on those, and they've got settings, and it goes to those portfolios. This one here is where we pick our individual commodities. Now, we're in the futures version, so we're limited to what we can trade. We can trade just what's trading on the Chicago Board of Trade, the Mercantile Exchange, and a couple of other smaller exchanges. So that's not like overwhelming with 15,000 stocks to have to choose from. This is really nice because we only have a few things that we can trade in the futures market, and we kind of focus in and don't spend all of our time with scanners and things that kind of going out searching the market trying to find something to trade. We know what we're going to trade. We have these 4 primary markets, and these are what we like to trade. And then if we want to go off and trade corn or wheat or soybeans or copper, live cattle, crude oil, things like that, it's a lot of fun. You can go trade some of these other things too. Got all the currencies in here. So if you're into foreign currency trading, you trade the British pound, we can even have Canadian dollar and Bitcoin, live cattle, feeder cattle, all kinds of fun stuff. Look, let's go down through the list a little bit more. There's natural gas, there's gold, there's silver, there's the Nikkei if you want to trade that. We got platinum and palladium, silver, soybeans, soybean meal, soybean oil, Swiss franc, UST bond, wheat. Neat stuff, fun stuff. This is where the fun stuff to trade is. All right. So now we're going to come over here, and I'm going to come down, and I'm going to create a new portfolio. I'm going to come in, and I'm just going to create a portfolio of these same stocks that we're looking at. So this is just going to be what I've got to go look and see what I called the other ones. I want it in the same style. So we're going to do 04 mini indexes day. So that's what we're going to call it. 04 dash mini indexes. And I'm going to do it. This is going to be a date. We're going to go do the daily chart for each one. So if we want to go look at the daily charts, now I have to just bring them up and put them into that portfolio. So this case, I'm going to come in and I'm going to go to let's start with the Russell 2000, and we're doing the minis, not the micros. The micros are 10 times smaller. So if you're just starting out and you're just learning how to trade, the micros are a great tool. You can learn to do those. Okay, now this is just a straight up, flat up chart. There's nothing really special about it. So we're going to turn on my favorite indicator, which is the bulls and bears. And that's going to tell us the Fibonacci sequence and the Elliott Wave sequence. I like to turn on the Fibonacci. So that's kind of what we're going to look at. Down here, this is the DMI, which is telling us whether this market is actively tradable or not. If it falls below the threshold of 20, this is a momentum indicator. It tells you the momentum of this market is pretty low. But so this looks like, to me, the Russell looks like we should have an up day. It's coming down, it's curling, it's breaking those blue lights. So that's bullish. So if we come in and we do a little Fibonacci work in here, you can see that this could be a possible ABC to the downside. So we get the rally. How far back is that rally going to go? And then turn and fall once again. That would be kind of one scenario, one way that we could read this chart. The other way is that you could read it coming the other direction. So there's always an up and a down for everything, right? There's always an argument for both directions, which is what makes a market. So now you could come in and say, okay, well, this market's gone A, B, C. It's coming down, making this, testing all these lows down in here. So we got these double, triple bottoms down in here. And then we'd anticipate this market rallying into expiration. Now, this has an expiration because in the futures market, we don't have pattern day trading rules, and we can buy and sell, go long and short without any penalties. We don't have to borrow the stock. We don't have to pay interest. We don't have to pay dividends if the dividends get paid while we're short. We don't have to do any of that stuff. It's just straight up trading. So because of that expiration date, we'll have to make a delivery or take a delivery by that date, because it's kind of based around the idea of commodities, right? So over in the corn market, you're going to either take delivery of the corn or you're going to make delivery of the corn. It's easier to kind of think about it like that. So if I buy it back here in August sometime, if I buy corn, and it works the same here on the Russell in the futures market, they expire. Okay, this is something you have to deal with in the futures market, but it's also the advantage that gives us the ability not to have all of these pattern day trading rules. We can open our account with $5,000. We can buy and sell. We can short. We can go long. Every market can short and long. There's no waiting to see if it's easy to borrow or any of that kind of stuff. We just can do it. Okay, they just let you do it because you have an expiration date, and this is the concept. So if let's say this is corn and I buy corn, well, I have to either one, deliver corn by the expiration date, because the guy, or receive corn because you bought it. You bought corn, right? You bought a truckload of corn, load of corn. And so if you don't offset that, so if you bought it, well, they're going to deliver it to you on the delivery date, which in this case, you can see is this big red line that tells you that's the expiration date of the contract, and they're going to deliver to you the corn. In this case, it's the Russell 2000. So if you buy one contract, it represents a certain dollar amount of Russell 2000. They're going to deliver to you the shares of the Russell 2000, right? They're actually cash settled, so they'd send you the cash, and you'd be responsible for receiving that cash of the S&P or the Russell. So what happens is, let's say this is corn. Let's say you sell it. Well, if you sell it and you're not a farmer, you don't have corn to sell, and the expiration date comes, they're going to say, hey, where's my corn? You sold it to me. I want some corn. So, well, I don't have any. So what do you have to do? You have to buy some corn. And all you do is just offset the other side before the expiration date, and you're cool. And you can do it as many times as you want. You can buy and sell, buy and sell, buy and sell, buy and sell, all the way up to the expiration date. And then just make sure that if you sold it and went short, then you buy it back to cover the short that you made, and then you don't have to make delivery. It's that simple. All right. So that's the Russell, and that's the daily chart. Looks to me like we're on a bullish trend today, so we can think about the market being a little bit more bullish. But of course, we could come along and go this direction again, right? Oh, let's grab the tool. Go this direction, and we could get a peak and a rally and a fall once again. Depends on whether it's the fundamentals that decide whether the market's bullish or bearish. And we got good fundamentals today in the news, so we're a little bit bullish on this market. So that's the Russell. Let's go grab the S&P. So the S&P, and again, we're going to do the mini, not the micro. And I'm going to just open up all these charts at once. So we're going to come in here, S&P mini. There's the S&P. We're going to go do the Dow. So a Dow mini, and we open up that one, and then we're going to do the Nasdaq. So Nasdaq is the other one. We're going to do the mini. So I just open up all four of those. I'm going to come up here and bring them all four on the screen at once. And I'm going to center the chart. I hit this little center button chart up here and brings them all up. Now they're all don't have bulls and bears. I want them all to look like this. So I just right click on this one and say apply settings to all charts, and they all look the same now. So that's how I can make everything look the same with only setting up one the way I want it. So that's pretty good. We're looking at a bullish market on all of these. Look at they're all running on the daily chart. You can see they're all bullish and running. So this is the portfolio I've made, so I can look at the daily chart and see what's going on in the daily chart. So now we're going to go back over, and because I've already got portfolios for 1 minute chart, I come back into 1 minute chart. I can click on that one, and it's going to bring us right back and right where we were before. And there's our all of our 1 minute charts. Now look at this market, broke above that previous high, that green line, and took off and made a nice run. So all the markets are being bullish. Look at the Russell's up, the S&P's up, the Dow's up. The Nasdaq is being the lagger. So if we wanted to take a position on the Nasdaq, we could anticipate the Nasdaq's going to rally as well. Okay, so it's the rest of these are all being really nice and bullish and running high, running hot. So we'll have to wait and see. I haven't got a buy signal in there. Remember, we're going to go look for an ABC. We got kind of a little ABC here on the Dow, didn't we? If I can bring this full screen so you can see it a little bit better, but you can see the Dow made this first rally. It came up, got these little red bars in here, and then it started to go once again, and it's up here in the 130.9 Fibonacci projection range. So it broke that green bar while we were over creating our portfolio, and it's up here kind of topping out right now. So we'll look for a little pullback and see if it won't give us a little pullback, and then maybe there's another rally in there for us and it'll continue higher. So we're going to watch for a pullback. Don't want to get short right now because the market's very bullish. We had some positive news. Look at the Russell running. Again, you're going to look back at this and say, well, maybe I should have got in when the market opened. Well, on the opening was back here. Look at the volume. You can see where the market opened, and it was all over the place. This was our entry point for a long position if you wanted to just buy on a crossover of the average true range. So as it crossed that average true range, notice on the average true range, it didn't actually do that on the Dow until, well, it was about the open. The opening, we crossed the average true range and just kept going up. Right here was the open, or the crossing of the average true range on the S&P, and then right in here was the average true range. It crossed over on the Nasdaq. When it crosses that average true range, oftentimes, you know, especially coming out of a flatter market, those are generally good places to be looking for entry points. So look at this market here, a Russell 2000 just going to the moon right now. That's a really good trade. And we're coming in here and looking at all these markets. Then we come over to the trading tab. And again, our trading tab is over here on the right-hand side, so it's not in the way. It doesn't jump up in front of us as we place orders. And this is a drag and drop platform. So you can, if you want to place an order, you click the stop order button and it'll drag it on the screen, and you can just move it to wherever you want, wherever the market goes to. It'll drop those orders. Track and Trade was actually the company that Gecko Software, Track and Trade, this platform, we were the ones that actually invented drag and drop orders. First trading platform. This trading platform's been around for years. This is a very robust platform. It's been around for 20 years, 30 years, 20, yeah, 20, 23, 20 years, something like that, 23 years. So 23, 24, 25 years this platform's been around. This has been a really good platform. It's won Stocks and Commodities Annual Reader's Choice Awards 7 times, 7 Reader's Choice Awards. That's pretty good. But it's a good platform. What was I saying? Oh, invented drag and drop orders. This platform was the first one to come out with drag and drop orders, and now you see lots of platforms copied them and created drag and drop orders. 23 years ago, drag and drop orders was an amazing invention. Same with all these little drawing tools and stuff. This was one of the first platforms to create all these little drawing tools that you draw in your charts with. One of the first programs to do that. Boy, look at this market go. Makes you wish you were in it, doesn't it? We missed an opportunity to be in here. But we'll just watch for now. It'll settle down. It'll give us an opportunity to get in. We might want to look for a reversal, but we got such good news. I hate to, when you get good positive news, I hate to take short positions and look for big retracements and anticipate big falls in the market. Because oftentimes the market gets up there like that. People are excited about having the stock, especially as you saw out on the daily chart. It looks like a place where a lot of people want to be buyers and look for the market to rally and start to go higher. So not real thrilled about taking reversals and taking a real short position. I'd rather wait for it to fall, come back down and start to go long again and take that second reflection higher when we got positive bullish news. So where we got this first leg, don't feel pressure, don't feel FOMO, don't feel fear of missing out. If nothing comes in for us and we can't make a trade, well, that happens sometimes too. We don't want to push things. We don't want to make stupid decisions. We can always look back and say, well, we coulda, woulda, shoulda, and learn from that and say that would have been a great place to get in. And I'll remember that for tomorrow. But we don't want to make stupid decisions. If we're bullish the market, we don't want to buy high and sell higher. A lot of guys like to do that, and you can do that if that's the strategy for you. I'm not trying to tell you how to trade. I'm just showing you how I trade. This is how I do it. And so you got your own strategies you can all do yourself. And maybe some of you guys picked that up. If you did, if you're in a trade and making a trade, chat for me. Chat in the window and let me know how you're doing. If you're out there watching, you can say something in there too. Let me know you're here. I'll chat something here. So you can see over there, we can chat to each other. So now it's starting to look at the Dow. The Dow's starting to round off at the top. So we'll expect a little bit of a pullback here. We'll see how far back it pulls back. I want to get that ABC pattern, right? That ABC reflection. We'll see which chart we want to trade. I'm leaning a little bit towards the S&P or the Dow. I don't want to go through chops. As oftentimes we'll get up to the top of these trends, and the buyers don't want to get rid of their positions. They're happy they have them. The shorter term trader, oh, look at this. The Russell actually had the little flagging formation in there, kind of came in and flagged a little bit for us. It didn't ever go red. And then it broke out of that little pullback, and now it's starting to rally once again. So that's positive for the look at all the markets are going. The Dow, we could jump in right now and take this break above this previous high as all these other markets are taking off and running off of their flags. See this little flag right here? So that flag right there, that flag is where we call it, the market is flagging, meaning that it's going up, it's making higher highs and higher lows, but then it makes lower highs, but it still has higher lows. Okay, so it's going into a little flag formation or a pennant. That's what we call those. So it's lower highs and higher lows, and that's a little pennant formation. So you could draw the bottom in there too, but it's just the natural trend line. But that's your little flag or your little pennant formation. And if it breaks out the top of that, those are usually good places to get into the market. But this is already pretty high up in that trend, and it looks like it wants to round out a little bit. So this is buying high and selling higher. Again, I'm not a real fan of that. Of course, in hindsight, excuse me, in hindsight, you can look back and say, oh my gosh, that wasn't high. So like the Russell, for example, we could have taken that little flag right there and been up some in a nice trade right now. So buying high and selling higher is a strategy you can do. That's about $100. It's broke out of there, $95. That'd have been a good trade towards our $500 day. But how much higher is it going to go? So the Dow just kind of died. We thought it might break out and follow along with the Russell, right? But it didn't. The S&P, it gave us 2 bars, and now it looks like it's slowing down. And the Nasdaq's getting a red bar. So buying high and selling higher oftentimes is difficult. I'd rather buy low and sell high. This market's rallying, it's bullish. So now I'm just waiting for an opportunity for me to get in. I want to see it pull back a little bit, give me an opportunity to buy a little pullback, digest this first rally, and then anticipate the next leg. There's 8 o'clock. There's our 8 o'clock bell. So now's the time to start trading. That first 30 minutes, kind of, you have to decide whether you're the first 5 minutes. A lot of guys, sometimes we watch the first 5 minutes, and then, some will watch the first 10 minutes, the first 15 minutes, and then bracket the highs and lows of the first 10, 15-minute time frame. And then those are kind of the brackets. Now we got the VWAP down in there. And remember, the VWAP's this big blue line down in the middle. That oftentimes acts as a rubber band. And so think of the VWAP as a rubber band. The market goes up, and the further it pulls away from the rubber band, the harder the rubber band pulls on it. So it's like gravity, and it pulls back to the VWAP. And then the VWAP, it'll swing past the VWAP too far to the downside, and then the VWAP pulls. It starts to pull like gravity to the upside, and it starts to pull it back to the upside. So think of VWAP as a rubber band, kind of like gravity. When it's above it, it's going to pull it back down. Not always. I mean, sometimes it'll just stay above the VWAP if it's a nice strong day, and you just trade above the VWAP all day long. And there's nothing wrong with that. That's great. Okay, here's our flag coming in again on the. We only got one bar back on the Nasdaq. So there's your first trend, and we're going into the ABC pattern. So that's our next move. So that first trend there in the Nasdaq went all the way up. That was $1,185. That's a big move. Again, those are big bars. That one bar is $575. So if that's too big of a risk for you to be taken, we can take that market, that big Nasdaq market, and go down to the micro mini. It was 10 times smaller. So instead of that bar being $500, it'd be a $50 bar. And then that's a little bit more realistic for a lot of people. A lot of new traders, smaller accounts, are going to be wanting to trade on the micro minis rather than on these mini accounts. Okay, here's our drop that we were looking for coming in on the Dow. the S&P getting a red bar up there, broke the average true range, or the average true range of the market, so those yellow dots. And it's just set to 1, so the average true range of 1. And I'll show you those settings over here. Come over to the settings on the ATR. You can see it's just set to 1 and 1, 1.0. And I've just got it set. The style is just the dots. On Monday we were doing this, and we had these set to the line, and you could just see it was just kind of like a moving average, just kind of the average of the market. And I like that, because if it changes the average from up, the one averaged up to the one average of down, that's usually a good place to take a different direction in the market, because the market's changing the average true range. So those are good signals for entry. I like those. We'll put it back to dots. Lines, we're going to go back to dots so we can see them as little dots. And then we can also hook up the trailing stop. So if we take a trailing stop, we can put it on those dots, and it'll trail automatically. The software will move our order along those dots, and pretty good place to trail behind the market with your stops. Every single new bar gets a new move of the stop. A lot of guys ask me, they're like, what? You move your stop with every new price bar? Well, it's kind of a pain when you're doing it manually, but if you just have the software do it, sure, it'll just move it every single time and move your trailing stop for you with every new price bar up these dots. All right, we're getting a pullback. This is what we were looking for. Oh, look at the Russell. It's not pulling back. It's like, no way, buddy. And the Nasdaq, it's rallying. Okay, the S&P, here we go. The S&P is getting ready to fall. Nasdaq's down. Here they go. Here's the turn. So if you want to take a short position, see the Dow went first, so the others will probably follow. You got a leader, and then you get the followers. So the leader was the Dow, the follower was the S&P. Now we got the Nasdaq. Is the Nasdaq going to turn and fall too? Is it going to fall? It hasn't broke the average true range yet. So let's get rid of some of these tools on here so you can see a little better. And look at the Russell, still going counter trend. It wants to go. Now, the Russell 2000, or the 2000, what are the best? I'm going to put that in scare quotes, but the best small caps. That's what the Russell 2000 is. The Dow, of course, is the Dow 30 is the 30 best stocks that these guys who create the Dow, they like the best. So there's the S&P again. That's the same as the top 500 companies in the stock market. And then the Nasdaq is the top 100 companies in the Nasdaq, on the Nasdaq exchange. Look at the Russell go. The Russell's still going. Okay, we're getting the pullback here on the Dow. This is what we were looking for. We want a little bit of a digestion of this thing. The S&P is not falling as much. Look, it's getting ready to rally once again off 2-bar pullback and starts to rally once again. The Dow looks most interesting to me. That Russell is going crazy. Holy cow. Small caps are winning today. Got one little flag in there, and it took off again like a rocket ship. So the Dow Starting to digest this run. I want to see it turn and go back up again. It could go. The problem is what you see oftentimes is we get after this big excitement of the morning, market will go up and then it comes back down. And then you think, okay, we're going to get the reflection and away we're going to go. We're going to go back up. And then it just kind of wanders and goes sideways and starts kicking you out. So, but we're going to take this first run. We're going to look for this thing to, oh, I'm up here. No, I want to get rid of that order. We're going to come in. I wanted to be in that one. Oh, I missed my trigger. Can I get it? Yeah, there we go. Okay, we're going to be long one right here. And I'm just going to put my stop in there. It's going to be a reversal stop in case this thing fails and wants to fall again. Give us a little kickback and then fall. I hate it when it does that. Gives us a false long position and then falls back out of the bottom. Especially where we got all these other markets that are still high, they could still pull this market down. But we're going to anticipate an ABC in here, and we're going to anticipate a rally off this first green bar to make a new high. That's what that is. That's a trigger. First green bar to make a new high. So higher highs and higher lows. We just want the market to stay making higher highs and higher lows. If it stops doing that and starts making lower highs and lower lows and higher lows, going into what we call chop, right? Whipsaw, we'll take a loss. We'll just have to get out, stop, and wait. Russell's the one we should be trading. Here we go with the S&P's giving us that same pattern over here. Look, we got 3 reds and we're starting to go green again. So we could go long on the S&P at the same time if we wanted to, but we'll be a little bit more conservative here and just see if the Dow wants to rally. And it doesn't look like it wants to. That should have gone, and so we're going to get stopped out and get a reversal on this thing. It's going to fall. I hope it falls because we're going to take a reversal. Or rally. It's got to just get off the pot. Come on. So the S&P is starting to go. Let's drag the Dow up. Come on, Dow. We got in. We give you a chance to make us a little money, and you're wimping out on us. We don't want a wimpy market. Should have done the S&P. I like the Dow because there's only 30 stocks. Oftentimes it's a little bit more. Goes a little bit. It's oftentimes the leader. The S&P's got 500 stocks that have to push higher. This only has 30 stocks to push higher. Nasdaq has 100 stocks that has to push higher to make a trend. The Russell has 2,000 stocks that have to all rally to make a trend. All 2,000 of our small caps are rallying. Oh, look at this Dow. What a lazy market. Come on. Are we just going to start chopping here? Boy, look at the Russell. Now, that's FOMO right there. That's fear of missing out on that one. Feel bad we're not in the Russell. I like to trade the Russell. Russell's a good market. I'd probably trade the Nasdaq the least. Look at that. We just took a haircut on that one. All right, so now we have to recover. So now we go into recovery mode, and so we right click on it, say we're going to bring in our limit order. Actually, I'm going to bring this full screen so you can see it a little better. Okay, and now what we want to do is try and recover our $55. We'll just put this in here, get our money back out of it. There's 50. There we go. Okay, so we're back to green again. And that's what I like to do. If we take a loss, I like to just, as soon as I can, take that money back out and get me back to green. So I'm not sweating it that I'm losing money, and then I add another loser and another loser and another loser, trying to, make a bigger win. Now you look at it and you're like, whoa, Lan, you should have stayed in. Look at this thing's dropping now and you would have made more money. Yes, but I was down. Psychologically, for me, I like to recover my losses first. I can take another trade here. There will be another opportunity. There's more opportunities in these markets than you can shake a stick at. So to be able to get my money back from the loser, that's my first goal. I just want to not dig myself deeper and deeper in a hole trying to make a great big win. So if I take a loss, my very next trade is just to try to recover my lost money, and then I can start from a positive green place, and I don't feel so much pressure on me to end up with a losing day. So got plenty of opportunities, not worried about having opportunities. Just get my money back. So now I'm back to, we're green $15. You know, our goal for the day is 500. We'll see if we can do that. I also don't want to stay on here forever because I want to go and do some other trading too. So we'll see what happens. But hopefully these are helpful. You can learn from them. Look at that. That's breaking that ATR, that average true range. We got into the red bars, Heikin-Ashi bars. We're starting to retrace. We're getting that pullback. The Russell, we're going to wait and see, because oftentimes it'll come down, make a little, what we call an ABC, or a 1, 2, 3 top formation, right? 1, 2, 3, and then it'll drop. So it'll make its first drop, it'll pull back, and then it'll drop again. So that's what's happening here on the Dow. It's not very strong. It's getting a little weak because we are bullish, right? We have some good bullish news. We have to keep that in mind. So there's our little A, B, C, D pattern. So it's starting to fall down. We made our money back on that D pattern, which is what we like to do. We trade the C to D, right? We trade C to D. We let A to B happen. And so that's where you get FOMO. You're like, oh, crap, that ABC, I never caught it because Lan said, let the A, B happen and then catch the C to D. So I missed that ABC, and now look at the Russell, and I feel bad. Was that good advice Lan gave me? Well, you're going to have to decide that on your own. It's just what I like to do. I'm not telling you what you should do. I'm just telling you what I like to do. I've been doing this a long time, so I have a little bit of experience. Feel like I can share that with you. Just having fun. We're just having fun. This is YouTube, so we're just having fun watching YouTube channels. Do a little trading. Let's come over here. I got something for you else. Let's see. I want you to subscribe and ring that little bell, because I like to come and do these live shows. It's fun. I'm having fun. But if you guys want to come and join me and do these live shows, you have to subscribe to the channel and ring the little bell so that you know that I'm coming live. Because I'm not going to do live every day. And if you don't ring the little bell, you won't know when I'm coming live. I'll try to announce it ahead of time. I'll try to say, hey, you know, I'm going to go live tomorrow. And you'll get a notice a little bit in advance if you ring the bell. But you got to subscribe so you don't lose the channel. Trade Mentors, tradementors.com is our website. And then ring the bell so that it'll send you a notice and say, hey, Lan's going to go live tomorrow at 7:30 in the morning. Because I'm not going to do this every day, but I'm having fun. I like doing it. It's fun for me. So I like to share my knowledge and experience and what I like to do. Look at this nice little move over from the ATR. You can just buy and sell at the ATR and just trail those yellow lights. That's a good strategy. So not waiting for these ABC patterns and stuff like that. You can just say, hey, look, I'm going to take the opportunity there, risk back to the yellow lights, and then trail down the yellow lights until it crosses again. Perfectly fine. You can do that. That's a lot of traders will follow that strategy. That's a good strategy, the ATR, especially with these Heikin-Ashi bars. If you turn off the Heikin-Ashi bars, it kind of, you're going to have to find a different setting, because the Heikin-Ashi bars with 1-to-1 are a good setting. But if you're on the normal bars and you're not using Heikin-Ashi, that a 1-to-1 on the ATR, average true range, that's not a good setting. You're going to have to find and adjust to a different setting. What's going on? That's just my setting with the Heikin-Ashi bars. So you can see the difference between those two. All right. Things are getting a little quiet right here. We got another break. Look at this. The Russell looks like it wants to break higher above the Heikin-Ashi again. Now this is let's bring that full screen so you can see it a little better. Make those bars a little bigger. So this is our little ABC. Remember I said that we don't want to get in on the first drop, because sometimes it pulls right back, creates another high, and then it falls. So on this one here, if this doesn't break higher, then probably break lower, right? So we can click our little QOCO button. I've got that programmed in there, and we're going to take, in this case, I put in three contracts. So we'll add our OCO in here. And this is where you can come in and say, okay, our $500 our goal for 500 bucks is right there. So if the Russell falls back down to that limit, that's where we'll get out. This is my stop. Now I can just come in and tell the stop edit, and I can tell it to trail. I'm just going to tell it to trail on those yellow dots, so on the ATR. And you go like that, and away you go. And then you don't have to do anything. You sit back and wait. Now you can start doing some pillaring and pyramiding and, working for trying to get the market to add in a little bit more as the market moves in your favor. I don't like to start adding into my positions because I'm not a scalper. I'm a day trader. I'm a trend trader, momentum trader. I'm looking for the momentum. So I will, I don't generally like to start adding into my positions until my stop gets below my entry point. Once my stop gets below my entry point and I've got some money build up, I can start adding in to my position and building a bigger position. It's called pillaring and pyramiding, depending on how you take them off and put them back on. If you want to know a little bit about how to pillar and pyramid, you can subscribe to Pit News Magazine. I threw that up there for you. Pit News Magazine, I write lots of articles in Pit News Magazine, and I've written articles about that. Look at that. This thing's wimping out on us. There we go. It's starting to drop a little bit better. It's got to break that low right there to prove that it wants to go. Our stop is still behind our entry point. We haven't brought it to break even. So if it comes back, we're still in a losing position. If I wanted to, I could say, look, you know what? I'm not going to let you take any money away from me. I'm going to put that at break even. And if I just put it at break even, if it comes back, it stops me out. Well, it could stop me out and then turn and fall again. And that's the disadvantage of bringing your stop in too quickly, because it go up, stop you out, because it knows, the market's smart. It knows where all the orders are. And if we bring our orders to break even too quickly, it'll go back up, stop us all out, and then fall. So you kind of hold your stops back, but then that puts you into a down, into a little bit of a drawdown. And sometimes I'm just like, nah, I'm not going to take the drawdown. There'll be another opportunity. I'll just do it again. And the very best trades that I have are ones that just immediately go in my favor. If they sit there and bounce around a little bit, they usually end up being crappy trades anyway. So it's like, why bother? Just wait for one that goes. All right, we're close. 300, we're sitting there bouncing around the $300 mark. It could turn right now and turn around and go right back up and stop us out with a scratch trade, and that would be disappointing. But we're momentum traders. We're not going to scalp this out and say, oh, take the 375, Lan, take the 375. I'm going to risk the 375 to get the full 500. But I'm going to start trailing. Now, I've got a bar right here, right? The high of that Fibonacci bar, that would be a good place to move my stop. So I got my stop at the high of the Fibonacci bar. Now I can tell the software to do that by itself if it wanted to, but because I wanted to bring that in faster, I did. But if you want to go for the longer term trend, you don't put your limit in there. Put your stop up there on the yellow dots and let it just fall down. This market could go clear down, right? I mean, it could drop all the way back down to the VWAP. And that would be a nice trade to stay into and ride it all the way to the VWAP. Just put your trailing stop on the yellow dot. Just depends on what your strategy is, how much money you want to try and make, how much you're willing to risk of your open profit. Now, at this point, this stupid market's starting to pull back. Almost hit our goal of $500. Come on. Just push down there one more time. We got 4 bars. The market oftentimes will go down and it'll go 4 bars, and then that's where you get your retracement. 4 or 5 red bars like that, that's a really good signal for an entry. We'll go up, we'll get 2 green bars, and then it'll drop again. So this is a dangerous spot right here because it's making a new low on the 4th big bar, and if it doesn't go down and touch that, I might just take it off the table right there because the next bar will probably retrace and be green. Come on, touch it, touch it. You're almost there. One more. Oh my goodness. Give it to me. There we go. Touch it, touch. Oh my goodness. It went right down and touched. If I'd have been $500 instead of $510, I'd have touched it. There we go. Okay, we're out. We made 480 bucks. And there it goes. It keeps still going down. So we made our $480 for the day. And this market's dropping. It's going to go probably all the way down. See, we could have stayed in. You're going to say, Lan, why'd you get out at 500? Could have stayed in. Yeah, you could have. But our goal was 500. I'll go $500. Now we made 500. So we made 500 yesterday, make $500. How much money do you need in a month to make this worthwhile? So, you know, you're going to have to decide how you want to do it. All right, subscribe to Pit News Magazine. I've got you a coupon code in there. You can get an entire year of Pit News Magazine for only $1. Just go over to pitnews.com and subscribe. Support us over there at Pit News Magazine. That's our sponsor today. And giving you an entire year of Pit News Magazine for $1. And if you would leave a comment. One of the greatest things about YouTube is if you leave a comment, it'll help get this out to other people so other people can come and join us. The more people we get to come and join us, the more often I'll do this. Nobody comes and watches. There's no reason for me to come and do these live. I just do, I'll go do something else, but it's fun. I like to do it. So if you want to go down and leave a comment, you say, well, I don't know what to comment. Just say hi. Just say hi. That's all I want to know. I just want to have you say hi in the comments, just to let me know you got to this point, and that would be appreciated. And hit that like button so that the algorithm knows that you like this video and you want to see more of these. And then make sure you hit the ring the bell so that it notifies you. All right, guys, that's it. We made our $500. Well, a little shy, $20, but I'm not going to risk $400 to make $20. I'm happy with that. And we're going to catch you possibly tomorrow. Let's see how many people hit like and ring the bell. And then maybe we'll show up and do this again tomorrow. And you can go get your software. Make sure you go get your software so when we do it tomorrow, you can follow along and you can do this with us.